It is now time for Trade What You See with your host, Larry Pesavento. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Larry Pesavento.
Okay, good afternoon, folks. And we have a special guest today. We're going to have Byron Tucker on. I think he's on the line right now. Byron, are you there?
Hi, Larry. How are you today?
Good. Byron's decided to share some information that he was at a meeting on monetary policy with some of the talking heads from Washington and Wall Street. And Byron, why don't you start out where you were and what they talked about and bring in some of the things that you have from your history about Goldman Sachs and stuff. Could you start out and go ahead?
Certainly. Last Friday, the business school at the University of Chicago, the Booth School, put on a global monetary policy forum, which they do annually. And actually, it's global this year, not just U.S. There were four economists, one from Merrill Lynch, one from Goldman Sachs, and two professors who wrote a paper, and then two of the governors of the Fed critiqued it. And that was in the morning session. And in the afternoon sessions, the Vice President of the European Central Bank, Vice Chairman of the Federal Reserve Board, and the Deputy Governor of the Bank of Japan all talked about what was going on with large balance sheets for central banks. But the morning session was about the equilibrium rate, or in other words, the ideal rate for short-term interest rates, and what that should be. And what struck me from listening to these very bright people talk was it was all model-driven. There were, from what I could ascertain from both seeing the paper and listening, no inputs from the market. It was various econometric models, and one of the Fed governors, a new woman on the board who was quite clear-headed, critiqued the models. She said these models are incomplete and inexact and insufficient, but we don't have another tool. But that's because I think the underlying assumption is that they make is that models are the way to go. The afternoon session was a little more varied because these central bankers are trying to justify fundamentally how they can accommodate balance sheets that are dramatically larger than anything they've ever had in the past. And all in all, you realize there's a form of groupthink that's driven by academic processes rather than by connection to the real world and the marketplace.
Was this meeting pretty much the same as the ones that you attend when you go to the ones in New York where you live?
Well, this is in New York. It
was from the University of Chicago. They were doing it in New York. Okay. Right.
They were doing it here, and it was full of media people and television. It was a big shoot. I didn't see much of it on the media. But
there was a website that posted it up. There was some research from Chicago Booth on education and monetary forum stuff that was out there for people that wanted to go look at it. That link has been posted into Tiger TV from our friend Mr. Z from Philadelphia. So if the folks want to look at it, all they have to do is go to TFNN and be able to pull it up and see it. But the question that we have from our friend Marshall up in Northern California, Byron, is do they have any information about how these models are constructed? Did they give any of that information at all?
Oh, it's public. I mean, it's probably on the website. Certainly it'll be at the Chicago Booth website. Yeah, they have, it was a multi-page, 30, 40, 50-page paper on their attempt to calculate an ideal equilibrium rate. And the models are all there. You can see what they are. But you need an econometric degree to really, from my point of view, understand them. I mean, I understand this stuff conceptually, but I do not know physical, detailed modeling principles.
We have someone throwing rotten vegetables, and that his comment is this. He says, how is this different than long-term capital management?
Well, the difference is long-term capital management didn't have the capacity to create the money they were playing games with.
Yeah, that's true.
And these guys can make it out of thin air. And I think if they can make it out of thin air, I'm speaking jocularly here, they can make it disappear the same way.
I wouldn't be surprised. Wow, it's really exciting to hear some of that stuff. Byron, you started your career back at Goldman Sachs. Can you tell us a little bit about that history and how many people are, gone through the process of going through the government with Goldman Sachs and stuff that you remember?
I don't remember all of them. I know I was first hired there by Bob Rubin, who was a really fine man, and ended up being Secretary of the Treasury, but he also at that time determined to get rid of Glass-Steagall and the uptick rule. So you wonder about that. And then he was chairman of Citibank when it went down the tubes. So he's kind of vanished from the public world. But I sat next to John Corzine in New York, and then I was shipped off to Chicago to set up the mercantile operation when they first started in the futures area. And it was a partnership then, and it was very different. It was smaller, and there was much more care with how money was handled. When it went public, basically you socialized all of the losses and you personalized all of the gains. In other words, if the stock went up and you had a bunch of options as an employee, you made a lot of money. If the stock went down, the stockholders took the hit. Mm-hmm. And I think when Wall Street, starting with Salomon Brothers and John Goodfriend back in the 80s, started going public, that's when Henry Kaufman left Solly. I think that's when Wall Street shifted.
Mm-hmm. You remember that story?
A round robin of a revolving door of people from the government to Goldman Sachs. Mario Draghi, for example, was the managing director of Goldman Sachs in Europe, and all of the major financial players in Europe and here have been connected to it or through it one time or another.
Wow. Byron, I don't know if you remember this or not, but the correlation that we had with Henry Kaufman when he was at Salomon Brothers, and Jerry Pegden was his right-hand man, and they were voting on whether to go into junk bonds or not. Do you remember the story behind that?
Oh yeah, basically Solly wanted to start essentially manipulating the T-bill market and playing games with certain kinds of debt. And Henry Kaufman said, this is wrong, and they overrode him, and he resigned. I mean, he was a man of real honor in that regard, and he went on, and because he was so famous, and he could actually move the whole market with his comments at that time, if you remember the bond market. So could Prechter at that point, too. Mm-hmm. But he went on to do his own consulting firm, like Henry Kissinger now.
Sure, just like a lot of these guys over the past years have been able to move the markets when they say something. Well, like all their central bankers, of course, do that, but there are economists that can still, shake up the market quite a bit. If Blackstone or BlackRock came out and said they were liquidating stocks, or Warren Buffett, of course he would never do that, but if he would come out and say, I'm liquidating my stocks to look for a better buying opportunity, that would put the market down quite a bit. So I'm sure that's why they don't do those things.
No, I think they're quite constrained on what they say. Although the Fed and the European Central Bank are both using what I call narratives to control the market. Draghi said he would do anything that was required and drove European rates as low as possible that they've had ever, and he's never done anything. I mean, really, until he started this round of essentially quantitative easing. But for 2 or 3 years, the market did simply what he wanted it to do because of what he said. It's power. That's really power, Larry.
Yeah, well, that's for sure. Byron, you've we talk every day, of course, more than once or twice a day, and you have some really informative websites and information tools that are available to some folks that they might not be aware of. Would you like to share with us a couple of your favorite sites and people that you listen to give you a solid foundation of what you really think is happening?
Well, there's a lot of information out there. I find Stratfor, Stratfor, which is a private news service, not that expensive, gives a real view of what's happening in the world that we don't get in the press in this country. But because it functions in this country and is plugged into intelligence services in various other countries, it has to be very circumspect about what it says, especially vis-a-vis U.S. policy. But I find that a very useful site. And then another one that I like is, I'm looking for it as we speak. Bear with me one moment here.
What's the one with Ben Hunt that you get, his letters
Ben
from?
Hunt
Are really...
Great. That's a terrific one. That is, that's you go at Ben Hunt at Salient Partners. And
so if people if they Google Ben Hunt, they'll be able to get information about him.
Right. He has two sites. One was Epsilon Theory, which he wrote first, and he was going to start charging for it. And Salient Partners, which is a multi-strategy hedge fund out of Houston that has about $20 billion under management. They brought him on as chief risk officer. He's trained as a money manager, a PhD in political science, and a very sophisticated thinker about game theory and information theory. And he looks at the market through that lens, and it probably is the most intellectually stimulating site that I go to because he ties it back to popular culture in very interesting way.
That's always interesting to go through some of those things. Byron, we're going to have you back on probably in a couple weeks because I'm going to try to do something that we've been talking about for 30 years and more than 30 years, is to get you to finally put your thoughts and everything into a book. I know you've got a lot of these things ready to go, but we've really got you moving to do this, BT, because you've got so much information that people would love to read about, and including the stories, but some of this, psychology of the market and trading ideas. You've got to get these in print, pal. We're not getting any younger, buddy.
That's certainly true. Well, I've got my Dragon Naturally Speaking going, and I brought my headset microphone together, and then my computer died. So once I get that back from the Apple Survival Store, I hope to start this, Larry. But thank you for the encouragement. I
remember 30 years ago when you first starting writing notes about it. It was, it was really some of the great, really good stuff. But I know you get really busy doing as many things as you're doing. But it's something that you really do. There's no money in it, but there's a great deal of personal satisfaction, and you make a lot of friends out of it. So that's the real reason to do it.
Well, I mean, you've done 10 or 11 books. I surely could do one.
Oh, wait a minute. Let me pull this dagger out of my back. You're right. You're about at least 10 times smarter than me.
No. You've done. No, I didn't mean it that way, Turkey. I just, you've run a lot of different businesses yourself.
Yeah. Anyway, I just wanted to thank you for having you on the show today because it's been really good. Folks, he's my best friend, and whenever I want to know how to spell something or what something means or where there's some place in the world that happens to be, I always call Byron. One of my favorite stories as a family, Byron used to come to California and stay with us a week or two at a time. And I had 2 young girls, and they loved to play I forget what the name of the thing was. Byron, stay on for just a couple more minutes. Will you after the break?
Sure.
Okay. Okay, we're back, folks, and we've got Byron Tucker on the line from New York City, and we've been talking about some monetary meetings and some websites, and is potentially writing a book. But Byron, I had to have you stay on for just a few more minutes. I know you got to run for a luncheon, but folks, Byron used to come to Westlake Village from Chicago. I lived in Chicago for 3 weeks, a month, and then we would come back to California, and Byron would most of the time just about every time would come with me. We would spend a week or two there, and my 2 teenage daughters, they were 12 and 13. Well, they were not even teenagers at that time. They were about 11 or 12, but they loved to play Jeopardy. And of course, we would, play the things. And I remember the first time we ever did this. We were in the really high level, and they pulled a card out, and they asked Byron the question. And I forget what the names, where it was, but it was some place in Africa where the 3 rivers came together. And it says, "Can you name these 3 rivers?" And Byron spit it out just perfectly, bang, bang, bang. And my daughters almost fell off the chair. Do you remember that, Byron?
Jeopardy games. I don't remember that in Africa.
Well, there was others, but that was the one. But the other one that was so funny was later on in the game, one of the questions came up that who was number 7 for the New York Yankees, and everybody knew it was Mickey Mantle except you, and you lived in New York at one time. Anyway, just a difference in education, I guess.
Well,
hey, tell the folks about your upbringing in Chattanooga and how you got to Wall Street and stuff, because that in itself is a really good thing. And you happen to also be a Kentucky colonel in the Confederate Army, don't you?
Yes. Well, I don't know about the Confederate Army. I think that went away.
Oh,
the
okay.
governor of Kentucky at one point appointed me a Kentucky colonel. Kentucky colonels are a civic organization that support the Boy Scouts and all sorts of things. And I knew through my wife at the time, I knew the secretary of the governor, which was her mother, and so the governor was very nice to me in that regard. But I realized in Chattanooga when I grew up that I had to get to a larger place, so I had the good fortune to go to Amherst College, and that was a real turnaround in terms of intellectual horizons and experience. And after that, I took 3 years off. I worked for a couple of years, traveled in Europe for a year, and then I started a PhD program in South Asian history at the University of Chicago. But it became very clear to me that I didn't really want to be a scholar of that stripe. So I walked over to the business school and said, "Let me in," and they said, "Okay." And so from there, I got recruited to Wall Street and made my way directly or indirectly. But it was, and now living in New York feels like home. I still have a lot of family in Tennessee, but it's after you live in a city like this, it's hard to go back.
Well, you've been in more hotels than the Gideon Bible, that's for sure. You have more airline miles than most pilots. I know that for a fact.
There's been some travel, which has been fun. But on an economic front, I noticed today in this piece that I get, Market Watch, which is an email that comes out in the morning, and they do a good summary. Last month, American CEOs spent $104.3 billion buying their own stock.
Wow.
That seems to me, beside the Fed put, that seems to me an amazing support for the market and a clear statement, in my personal opinion, of the phenomenal disincentives that you give CEOs by tying the bulk of their pay to stock options, because they're going to do everything they can to make sure they get paid. And I don't know that buying all of this back, wouldn't most people be happier to get dividends? I mean, really?
I would.
So would I.
Yeah.
So it's just interesting what we see going on in the country, and I look at it in terms of incentives, Larry. If you give people incentives to do something positive, they will.
Well, listen, I wanted to thank you for coming on today. We'll have you on in a few weeks, and we'll see if we can badger you in to get this book going down the road.
Okay, Larry, you bet.
Listen, good talking to you, my friend. Give Liz my best regards.
You bet. Have a great day. See you.
Okay, thank you. That was Byron Tucker from, he lives in New York part of the time. He lives in Scottsdale, Arizona the part of the time, and their main home is in the mountains of Connecticut. So we've been friends for a very long time. He is one smart cookie, folks. He uses big words. I mean, he uses words that have 6 and 7 letters in them just regularly. So that shows you how smart a guy must be. But anyway, why we became such good friends is still a mystery to me, but we've certainly traveled across the continents together and had a lot of fun. We used to trade going from California to Chicago. We used to drive because we used to try to make it in 20 hours from New York or from Chicago to California. Only did it a few times, but it was 28 hours. Okay, we're going to take a little break here to pay some bills, and we'll get back and we'll talk about the markets. We have Rich Anderson coming up tomorrow. Okay, we're back, folks. We're going to talk a little bit about the market. I sent out a special report today where it was time to sell the market. Basically, what I'm looking at here is there are 4 or 5 things. Well, actually, there's 6 things that I'm looking at. I posted them into Tiger TV, so you'll be able to, take a look at them if you want. But these are the kinds of things that we try to look at when we're trying to, determine whether we're going to have a pretty good move in something. We've had a nice run here in the NASDAQ. It slowed down a bit this week, which is what you like to see. But we've got a full moon this week. It's actually today or coming in late tonight, which is basically that 14-day cycle that we work with. It works about 70% of the time. The market will top or bottom on a full or new moon within 1 day. We have apogee coming in at the same time. And apogee is where the moon is as far away from the Earth as it gets. If you looked at it on an elliptical scale, you would see the apogee way, way out on one end, and then the other side of the ellipse that's closest to the Earth is perigee. So you have both of those to come in. Those are the things that Pythagoras worked on, back in 600 and some BC, because he was calculating tidal patterns and stuff based on lunar cycles, and he knew that there was certainly not a flat Earth, but that we were looking at, it was more of a circle, and he had calculated all these things. He also knew that the distance was roughly 250,000 miles. Can you imagine someone being able to do that from in the year 600 BC? My God, you're talking 2,000 years. I mean, that's just truly amazing that he was able to do something like that. That's why he has the honor of being the smartest person ever to live on the planet. That was the title given to him by Albert Einstein. The second thing that we're looking at is the strongest days of the month for the stock market over the past 100 years have been the last 2 days of the month and the first 3 days of the month. And this is the third day of the month, which is the last part of this statistical sample. So that should tell us that we're going at that point. The other thing is, if the moon were directly over the equator, that would be a trifecta. In other words, you'd have all three of them lined up together. That doesn't happen very often. We're just a little off. We're about 3 days off on the moon hitting the equator at the right time, but that would have been a really good one. The third thing is that we've got, stocks have rallied into new high ground this week again. We've had a little bit of divergence, of course, in the New York Stock Exchange Index again. Even the NASDAQ is starting to slow down. Even though we hit 5,000, we were only there for 45 minutes. They had a special on that on CNBC today, the fact that the NASDAQ did get above 5,000. I don't think it's anything, exciting about that. Maybe it is, maybe it isn't, but it really didn't go charging into new high ground. Usually when markets break through to new high ground, they just explode to the upside, and this certainly hasn't been an explosion, and now we're giving most of those gains back. Should we go below 2080 in the S&P futures, this would really trigger what I think is a really important thing to be looking at. The fourth thing that I think is important, looking at the stocks where we are, is that we have several ABCD patterns forming on the hourly chart in the S&P 500. The NASDAQ is showing a very beautiful butterfly pattern up there that's very symmetrical. And it's been, the NASDAQ is basically just a few stocks, of which Apple is one of them. And we've talked about Apple many times before. The other thing is that bullish consensus. We have new bulls all the time. We got up to that 92% level in bullish consensus recently. We've dropped down a little bit this week to 90%. So that's the first time we've had a tiny bit of a pullback. So that's another reason to be a little skeptical about this. And the sixth thing is, of course, margin debt is also making new highs every day as people borrow more money to buy stocks. That always ends badly, folks. Historically, well, you cannot find a place in history where that does not end badly. It doesn't end badly if you're a consumer using your credit card or your banking account, whatever it is. When you overextend yourself and things don't go your way, the slightest little bit makes you have a really big problem. And then finally, one of the things that I just posted into Tiger TV here is the fact that we have a ABCD pattern forming in the VIX index, which also shows that we have very little fear in the market. We did hit the D point today, down around that 12, almost just a little under 13. So we're right at that point to see what's going on. So we'll see. Now, this might just be a nice correction in the market. It might be 3%, it might be 5%, it might be the major top. I really don't know. What if it is the major top, it is going to tell us. It is going to tell us, because what it's going to do is going to have one hell of a bad day. I've said all along here that we're going to have a down day of more than 700 Dow points sometime in this year. We'll see if it's going to be on the last day of the year. I don't know. But the reason why I say that is because the biggest update we had from low to high was 440 points. If you multiply that times 1.618, you come out with 700 points. And so that's what the move would be to the downside. Remember, the all-time record for the Dow Jones going down was 777 points when Henry Paulson was our Secretary of the Treasury, and he warned the Congress that we were going to have banking failures unless we gave the banks the ability to not fail. And of course, they passed the legislation back in 2000, in late 2008. The market continued to go down there until March of 2009. When we had our, right before March 2009, we had the biggest up day we've had in the Dow Jones, and that was 880 points in one day. That was before the bottom was made in March of 2009. So this has been a long bull market. We are looking for something really substantial to happen in here. I think it's going to be a lot worse than people thought, because there is just absolutely so much complacency. It really reminds me about how the market was in 2007, and again how it was in 2000. But I would like to say this: the froth that we're seeing now in the NASDAQ is nothing like what was happening in 2000, folks. Those of you that were in the market in 2000, if you'll remember, these stocks had no earnings and they were doubling in price. It was just truly amazing. Yesterday evening, they had on Bloomberg the founder of Lycos, which was bought out by Terra Nova. I happen to know that gentleman, and he made a lot of money. He sold out not near the top, or his market had already come off a bit. It was in 2000 I think it was 2000 when he sold the company to Terra Nova, and now he works for a investment banking group out of New York. But he was able to get out, with his skin. The rest of it, that was Q charts, if those of you don't remember. But those are the things that happened during 2000. These stocks would go absolutely nuts, up 30-40% in one day. And if you remember the commercials on CNBC where these young kids with the helicopters that were doing the day trading and all the day trading that was going on, and taking their pictures with the Xerox. I can still remember some of those guys. I think that guy's name was Stewart, that used to take pictures of the backside of himself to pass them out in the office while he was day trading. But anyway, that's totally different than what we have now. This is a more orderly market. It's goes up a little bit at a time, which is, like they say, it's the most hated bull market of all time. But we'll have to wait and see how history rectifies this, and we'll see, what really does happen. What Byron mentioned, we had Byron Tucker on at the top of the hour, with these companies buying out their stocks is, very good business for them, because they get paid on the amount of money that their stock values at it. And if they buy more stock, that just means there's less supply for the public, and it reduces the number of shares outstanding, and the price of the stock goes up, and they get paid more. There's nothing wrong with that. That's the American way. I don't think there's anything wrong with that at all. I would like to make a comment about the economic news of the day. It was more political than economic, and that was when Benjamin Netanyahu talked to Congress yesterday. I thought he made a great case. What was interesting to me is the warm reception that he got from everybody, which I think it was well-deserved. He's a tremendous statesman, and he's done a great deal of work. But the guy's got a lot of class, folks, and he knows about politics, because the first thing he did was he talked about how President Obama had helped Israel over these past 7 years that he's been in office. I think that was probably the only part of the speech that anybody would question. But anyway, it was very, very interesting how he did it. And I watched it. In fact, I watched all of it because I just wanted to see, what he had to say. I believe I'm going to get on my soapbox for 30 seconds, and then I'm done. I believe that the United States should be like Israel, where every person that is a citizen of the United States should be considered a member of the Army. In other words, if we get hostages or things like that, we should be considered as prisoners of war. And that's the way it is. Just don't negotiate. You can't negotiate. It's the more you give, the more they're going to take. I mean, if anybody's had kids, know the answer to that one. That's a no-brainer. That's really a no-brainer. One of my favorite stories with Mark Douglas, I don't know if I've mentioned this before, but we were in Chicago about 1 o'clock in the morning, 15 years ago, and we got on the elevator. It was a Friday night. We'd been out having dinner and stuff with some bond traders, and one of them lived in the building, so it was Mark and I and and Robert got on the elevator, and there was two guys on the elevator, and they were holding the elevator for us. And I got on the elevator, and I said, "Oh my God!" I said, "You're Ernie Banks." And for those that you don't know who Ernie Banks is, he's Mr. Chicago. He's the greatest Chicago Cub of all time. The shortstop's in the Hall of Fame, 500 home runs. He's he's the mayor of Chicago all time. He just passed away just a few months ago. But he asked me when I got on the board, he said, "You have kids?" And I said, "Of course." He says, "Do you lend money to your kids?" I said, "No." I said, "I give money to my kids. You never expect to get it back." He put his hand on my shoulder, and he said, "You know, kid," and I was just a kid at the time, he said, "You have figured it out." And he was telling to his friend, who was Bob Love, who was the center for the Chicago Bulls basketball team, who was trying to negotiate a loan with his kids. And Ernie Banks was trying to tell him, he says, "Just give him the money. You ain't never going to get it back." So that's the real reasoning behind that. So it's the same thing with the Treasury and stuff like that. They're loaning out money. I don't think the people that are they're giving the money back to us will ever get it back in the right amount, but we'll have to wait and see. The U.S. dollar index is very, very strong today. The euro is down, making near new lows near that 61% retracement again on the long-term weekly chart. And if we break below that, if we break below 110, folks, in the euro, we are heading for much, much lower prices in the euro. I wanted to, I'll bring up the weekly chart here so you can take a look at it, because we are right at this moment of truth here. Because if we don't hold this 111.10 area where we're trading about now, we're actually under that 110.10. If we get below that on a closing basis, that's going to really tell us that we are heading down towards the another 10 or 12 points down near par, and that would take the dollar index probably up to 100. I'm not saying that's going to happen, but we'll have to wait and see. Uh-oh, boys and girls, we have a treat. Mr. Rogers has someone walking by the window. It's Priceline Charlie from La Paz, Mexico. Charlie, are you there?
Yes, I am. How are you, Larry?
We are fine. We've been worried about you, Charlie. Tell us what's happening with Priceline.
Well, first of all, I want to congratulate you. You made a great call. I mean, a great call. You said cover everything, stay to the side.
Oh, yeah, well, that's one of the times when Charlie, my grandpa used to tell me, if you have the choice between lucky and smart, always pick lucky. So tell me, where do you stand now with it?
Well, I took 50% off to the side, and I waited, and the day of earnings, not a happy day, but that happens.
Yes.
And right now, I'm just watching it, and I am almost thinking that maybe this is the time. And I figured I'd call for advice from someone who knows what he's doing.
Well, this would be the place where you'd want to be looking to put it on, because we're right. It's trading right now exactly at $1,232 a share. It's trading exactly where the 61% retracement is off of the high from last March. And Charlie, it topped on March 3rd of last year, and so this is March the 4th of this year. So you're in that cycle zone too. So this would be the place where I'd certainly want to be looking at it. Do you know what I mean?
Oh, yes, I hear what you're saying. Very good. You talk about history quite a bit, and I was wondering, when you were growing up, what's the first president that you really respected when you were growing up of the United States?
When I was growing up, well, the first president, of course, when I grew up, it was Hoover. And then after that, of course, but the one that I respect the most, there's two of them. One is Thomas Jefferson. I think he's, just really brilliant. And then, of course, I really respect what Abraham Lincoln did, because he had the chutzpah to stand in. Charlie, stay with us. We got to pay a few bills, okay?
Okay,
we're back with Priceline Charlie from La Paz. Charlie, we were talking about presidents. I was able to meet two presidents in my lifetime. I met Bill Clinton once in New York, along with his wife, just passing through a hotel lobby. And I was able to have dinner with one president, Ronald Reagan and Nancy Reagan, when I was at Drexel. He used to like this place in Beverly Hills that was a very, very exclusive place that Drexel haunted all the time, and so I was invited to go with a couple of Drexel people, and that night they were having dinner there. So those are the only two that I met in all my years of being around this United States of America. Did you have a question about this, or?
Yeah, when you were growing up, it seems to me that Roosevelt was president in your very, very early years. Is that right?
Franklin Roosevelt. That's correct. Yeah, it sure was.
And what did you, what was it like if you compare that age, you're attacked by the Japanese at Pearl Harbor, and
I was only 1 year old, so they wouldn't let me go to war until I was 3. No, I don't remember anything about the war. I remember the remnants of the Depression. I remember that part because we came from a poor Italian family, very happy one, but we didn't have much money. But I had a good childhood. I grew up in Terre Haute, Indiana. I mean, I had all the wonderful things you could possibly ask for. Didn't have cars and stuff like that, but we had plenty of food. We had clothes on our back. Had a good education. It was fun. I don't have any. It's not like it is now. These kids are, they're spoiled rotten. I mean, they're just, and it's our fault. I'm more susceptible to that than anyone because I spoil my kids to this day. So, but that's what they're there for, I think.
By the way, I lived in Evansville, Indiana, for a period of time.
Sure,
I was working on one of the projects.
Right across from Louisville, Kentucky.
Yeah, and you know what? One of the happiest times of my life was growing in Evansville, Indiana. I mean, and I was raising a young family then. It was such a beautiful time. The people were very nice. The city I felt was a very nice city.
It very is.
Yeah, I have a very good impression of Indiana as a state.
Well, thank you, Charlie. I have a very great impression of La Paz, Mexico. All right, listen, you call in again when we get Priceline down to about 900, okay? Or call before then, of course.
I'll do that.
All right.
Thanks for the information.
You bet.
Great call.
You bet.
Thanks.
We've got our friend Mr. Z from Philadelphia. John, are you there?
Hey, Larry. Thanks very much.
Thanks for holding, buddy.
For having Mr. Tucker on again. Just as you're closing the show, wanted to share this. I posted a monthly S&P chart in the Tiger's Den for you. I will recall a lesson you taught that I first heard from you back in August of 2010 when you did a TFNN webinar, which I remember to this day. Anyway, from the 2007 top to the 2009 bottom in the S&P, a fib 1618 expansion higher of that move targets 2138. On the S&P cash thus far, we've gotten to 2119. If we happen to go a little bit higher, make new highs this week or next, that 2138 will be a key focus of mine. Just wanted to share that with you.
John, it could very easily do that because this market, even though it breaks, 150, 200 points, it comes right back. So the thing we want to watch for is a big move down, more than 400 points in one day. Then that would tell us that something, a big cycle is kicked in, and then we can really focus on the short side. But until that happens, you better watch to buy 3 to 5 day dips because that's just the way the name of the beast is right now.
Larry, thanks so much for the show.
Thank you for calling in, John. I certainly appreciate it. That's it, boys and girls. Live every day in an attitude of gratitude, and may God bless.